Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 12th of March, 2024. This is episode number 2634. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you all? It's been a few days since we've connected. Sorry I had an emergency yesterday. My wife got really sick overnight. I left early at 6 a.m. to the office and had to come back to take care of the kids, get them to school, and so on while she rested. And that, getting them to school is exactly at the same time as doing this live stream. So I had to cancel. But here we are today, and here's your convergent trading pre-market summary sheet. We've eliminated a lot of the details on the sheet because it's just too time consuming to put it together, the rotations, all that stuff. The market sentiment was firmly mixed earlier. Very interesting action overnight. We did have the U.S. inflation data this morning. Market splashed down. There was a quick flush to the downside, very algorithmic flush, and then it pushed back up, and we went through the scene of the crime, the SOC, and pushed back above. The SOC being around 98, 97.75, according to John P. of Convergent, John 471 of Convergent. So it's around 98, 97.75, 98. We pushed back through, and we are trading at 52.05 currently. So this kind of changes the landscape a little bit. There was quite a bit I wanted to cover with you here, given Friday's action. But the inflation data came in about 10 basis points higher, sending futures lower and then rallying. The core CPI 3-month annualized popped higher to 4.1% from 3.9%. That's a relatively big jump. Oracle reported last night or yesterday after the close. It beat. It is higher. Very interesting. The Argentine Central Bank cuts benchmark rates from 100%. Imagine 100% interest rate from the central bank to 80%. You borrow $1 today, you have to pay back $2 in a year. UK ILO unemployment is higher, and then another reminder that it is rollover week, and Friday is triple witching. Remember, for those of you who might have forgotten or didn't know, remember during rollover week we have some issues with delta and volume because a lot of the volume, remember in futures there are no dark pools, there are no direct trades, everything runs through the exchange. And as a result, all of the volume that has to roll is also run through the exchange through the products that you and I trade. There's not a special product, and so the delta is going to be affected by these spreads, working calendar spreads. As soon as it gets filled on a spread ratio preset spread premium, as soon as it gets filled on one leg, it trades the other, and that's not really a directional trade. Spreads are never directional trades. Here's the pace of the roll so far. The roll averages about 78, 79% of the open interest. On the high side, 82 or 84. On the low side, 68% on expiration. So let's consider 79%. Currently, we're at 59%. 59% of 79%. I divide those two by each other. It'll tell you what percent of the roll is probably done. This roll is not any different than others. It's tracking the min max. It's tracking in line. But it's still a roll, it's still expiration, and so you have to be mindful of the fact that your delta, cumulative delta, and your volume readings are going to be off as a result. Okay, so triple witching Friday, ahead on Friday, expiration Friday. As far as what's left on the calendar, we have Bank of England's butt. Is that Butte or butt? Um, we have ECB's Butch, and then we have the 10-year note auction. At 1, we have the monthly budget statement for February at 2, and then the API crude, so nothing really dramatic. As far as the S&P, we have a multi-distribution profile. This morning, the auction condition is price discovery. The volume is really good, but again, volume being it is roll, the volume is expected to be elevated. It is elevated at 260,000 contracts. The inventory is 90% short long before the CPI number. The inventory was at 100% long, and the range has expanded dramatically, 44.75 points, telling us that there's likely to be continued there's likely to be continued um, price discovery, aggressive price discovery across the board. Okay, so that's what we have. The overnight point of control 51.97. If you recall, last Friday's settlement was 51.9250. Okay, 51.9250, and the point of control is above there. So what I had intended to talk about today in terms of market action has changed. Yesterday, I would have loved to have done the Trader Bite because yesterday was one of those days where the action was likely to be obvious for the most part, at least at the open. Why? We've been one time framing up, and then on Friday we open inside of what is balance at new highs. We open there, we push higher into that 52.57 and a quarter, and then the market dramatically squeezes down, traversing the entire range of Thursday and closing outside of it. This is essentially an excess high. Technically, it's a tiny excess high. It's not as sweet as this rally excess high where we could predict pretty reasonably that the market is likely done to the short side out of this balance and is likely to push higher. It's not as pretty as this, but we did push above and then we finished well below the range. This is really a strong auction indication that that the market is exhausted to the buy side. That's what this is indicating. The point of control shifting down slightly, but remaining basically in line with where we've been. So we're establishing somewhat of a balance right in here. Okay. And we are trading right at the bottom of that balance. The bottom of balance really at 5200. 5200 is where this line is right now, roughly. Um, so yesterday, the expectation is we would want to sell every attempt higher. We would want to sell. We're expecting price discovery to the downside. We're back inside of this bigger micro composite here, this balance area, and the expectation is we're likely to push lower. And if it did, then 51.27 and a quarter is a double TPO low. And so we expect this weak low to be tested. That's what I was looking for yesterday, and today I expected the market to kind of start working itself down this way. What it has done is in the overnight session, We splashed down on the CPI, big red print here, just sweeping the book right through these weak lows. Um, and then breaking lower and then putting in a really exceptionally weak low here. I mean, this is pretty awful at 51.76 and a quarter, and then it bounces. It does a double tap and then breaks higher, and then ultimately pushes right back into the SOC, the scene of the crime here at 98. Okay, this is not expected. The expectation is you have your sweep, continuation, consolidate, weak low, pull back a little bit, and then squeeze lower. And what it did is it came right back. We saw this, by the way, across the board, treasuries and so on didn't really move directionally. Um, didn't move directionally and instead extended the overnight high to the upside. So the overnight high, the overnight low were right here. We extended them down and up. This is pretty aggressive. And now we're back at the mid. So what we have is the mid VWAP sandwich 5203, 51.99 on top of the point of control in what is a multi-distribution profile. Hey, that looks like Homer Simpson. Um, Multi-distribution profile. This is telling me that it's likely to be a pretty tough, pretty aggressive open today. You can see sizes coming in. The dots are getting bigger. Two-way battle. These are collisions here, fighting both sides. And we are looking at an open that's likely to be active. I would wait on today's open because we have such good range and good volume, factoring in the rollover. I would definitely wait for at least the first bracket to be done. So keep your hands clear of the mouse for the first half hour or so. See if the market wants to come back and retest Friday's range or if it'll drop back down into the week low overnight, left behind overnight, and to start pushing through this 51.76 and so on and so forth. Okay? So that's the main idea here. Do we yesterday we managed to push back to 51.91 again. Settlement was 51.9250 from Friday. I believe it's 51.9250. Yeah. So we missed it by about 4 ticks. And me yesterday, I was not interested in longs until and unless we took out the prior settlement and then had a weak pullback. And then now we are working ourselves back up the range into the 52.20 kind of balance area right here. Okay. So today, if we don't get, we're gapping up slightly. Okay. If we don't get immediate selling on the open that pushes and squeezes into the prior day's point of control and then takes out the 51.76, then the market has an appetite for longs here because we've broken yesterday's high and is likely to push to 52.20. I don't know which side is likely to win this match, but understand without a doubt that the market is out of balance here. And it's, since last Friday's action, it's been out of balance mainly to the downside, but today we're gapping up, and that's kind of throwing a wrench in things. Okay, the NQ basically in the same shape, except the NQ is relatively weaker. You can see the NQ is basically right at the prior day's high. The NQ managed to push a lot higher, but has come back a fair amount. The NQ looks weaker to me. It is in this big balance zone. The NQ is expected to kind of push in to yesterday's range and most likely drift lower. If it does, it's likely to drag the ES down with it. And now we're looking at the 5126 area for the ES as discussed, right? So NQ, very, very prominent engulfing day here. This has a lot of implications to the downside, and I don't think we're done with the downside. I'm seeing this as a correction up. Any buying, I'm seeing that as a minor correction up in a bull trend, and an immediate bear push on Friday. So we have, the bigger picture is still bullish, monthly, weekly, whatever, still bullish. And then we have the daily basically showing bearish. And so we have those two time frames kind of fighting with each other right now until we fix the structure above. The expectation is everything is pretty much going to be a pullback, most likely going to be a pullback for selling. We'll see how that plays out. Crude, I want to show you this for crude right here. Remember last Friday I talked about this. It pushed up. Oops. On the wrong screen. It pushed up on crude, pulled back, failed retest, and what I wrote from last Friday is this is very likely to push to 51.76 now. Crude looks tired and weak, and is very likely to extend to the downside. Here's crude today. So it's making its way down. So you can see crude pull back, reattempt the 80s, and now, as I said, I'm looking for it to push down into this 51.76 low, and it's well on its way. Yesterday it opened, it tested down, put in a weak low, then extended higher back to the point of control. Right there, missed it by 3 ticks. Today it's opening in range. I'm looking for crude to touch the prior settlement, roll over, and then take out the overnight low or the current low and push through that low into the 76 handle. That's what I'm looking for there. Okay, that's it. I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.